All right. Hi, everyone. Welcome to today's live analysis session brought to you by IC Markets. Right. Trust you've all had a great weekend. And before we start today's webinar, right, please take note of the disclaimer. Right. Take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for transactions in financial instruments. So take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. Before we dive into the charts and trading view, we'll take a look at what's on the calendar for this week. There's quite a few things going on, but I want to bring your attention towards the RBNZ monetary policy statement that's going to be released on Wednesday, 9th of October. And then we also have the FOMC meeting minutes that will be released after that as well. And on Thursday, we have US CPI data as well. All right. Hi, Shal. Good to see you as well. Good morning. Right. And as we progress through today's webinar, right, as well, do not hesitate to drop your request for any instruments. In the chat box, right? If you have any analysis requests, do drop them in early, and I can be more than happy to go through the analysis with you. All right. So as I mentioned right before we dive into the chart and trading view, right, there's quite a few things going on the calendar this week, right? So we also have the meeting minutes from the RBA's the minutes of the RBA's meeting that will be released tomorrow at 12:30 a.m. GMT, Tuesday, 8th of October. Then we have the RBNZ, the Reserve Bank of New Zealand, making its cash rate announcement as well, where they're expected to cut its official cash rate by 50 basis points to bring it down to 4.75%. Right, that's going to take place on Wednesday, 9 a.m. Wednesday, 9th of October, 1 a.m. GMT. We've also got the minutes from the FOMC meeting that took place in September, right? That's going to be released at 6 p.m. GMT, and we could see uh, we could get further insights into uh, the deliberations that took place during this meeting as well. So we could, this meeting, the minutes itself could function as a potential bearish catalyst for the dollar, right? And also for the RBNZ, where they're expected to cut its official cash rate by 50 basis points. And if we do see a statement that conveys a very dovish outlook on future monetary policy action, we can also expect the Kiwi to come under significant selling pressures. We also have inflation data out of the US that's on Thursday, 10th of October, 12:30 p.m. GMT. We have CPI data as well as PPI data out on Friday. Right, hi Costas, good to see you as well. Right, hi Shal. Yes, we can definitely cover Euro Pound and Euro Yen as well. We'll start off the analysis with the dollar index, of course, and then we'll make our way down through a couple of the majors, right, including the dollar yen, and we'll also take a look, of course, at Euro Pound. Now, let's take a quick recap of what happened on Friday, right? So last Friday, 4th of October, we had the highly anticipated non-farm payrolls and the unemployment rate released by the Bureau of Labor Statistics. Now, this one dropped on Friday, 4th of October, 12:30 p.m. GMT, where we saw non-farm payrolls increase quite strongly for the month of September, right? After languishing since April, right, with very weak job growth over the past 5 months, we saw non-farm payrolls increase by 254,000, which was much higher than any of the previous 5 months reading, as well as coming in higher than the forecast of 147%. And at the same time, we've also seen the unemployment rate edge down lower for the second consecutive month. So all of this pointed to a relatively strong, uh, robust and employment report. And we can also see that September's job change or job creation also exceeded the 12-month average of 203,000 as well, right? So we can see it does look like uh, job creation has ticked higher in September, of course. Now, but whether this continues moving forward is something that's to be seen as well, right? Could this just be a one-off surprise number in job creation, or is this going to be a more sustained move over the next couple of months, right? Is this jobs growth going to be more sustained, or is this just a one-off thing that's something that waits to be seen, right? But in short, last Friday's NFP's numbers and the unemployment rate pointed to a relatively robust state for the labor market in in America, right? So we saw robust job creation as reported by non-farm payrolls, with 254,000 jobs being added to the economy, while the unemployment rate edged lower for the second consecutive month, dropping down to 4.1%, right? So this was functioning as a pretty strong bullish catalyst for the dollar last Friday. Now, coming to this week's data, we have the RBNZ, right, releasing its monetary policy statement on Wednesday, 9th of October. That's at 1 a.m. GMT, right? So as I said earlier, right, they are widely expected to cut their cash rate by 50 basis points to bring it down to 4.75%. Remember, at their previous meeting, which took place in August, they unexpectedly cut rates by 25 basis points, right? At that time, market forecast was for the RBNZ to keep rates on hold, but they surprised markets by making the first cut since March of 2020 to bring it down to 5.25%. This time, however, they're expected to make a much larger reduction, making a 50 basis point cut. And should we also see a statement that conveys a very dovish outlook on future monetary policy action, we can no doubt expect the Kiwi to come under significant selling pressures on this day. So take note, this could be a very volatile period for the Kiwi, and we can expect this currency pair to come under significant selling pressures on Wednesday. Right, and you can see part of the reason for them to move ahead with the rate cut as well as is because inflation is returning closer to the RBNZ's target as well. Right, so we can see headline inflation on the left easing down to 3.3% in the second quarter of this year, while the core reading eased down to 2.8% in the second quarter of this year. Right, so it is when you look at headline CPI, it came in lower than the forecast of 3.5%, and also it marked the lowest reading since the June quarter of 2021. Right, so inflation seems to be heading in the right direction, and at the same time, we can also see economic output or GDP growth in New Zealand looking pretty weak, or it's stagnating, right? So that's part of the reason we can expect this rate cut to take place as well, right? It's in a bid to boost up the economy. Right, then looking at inflation in the US, right, CPI data is going to be released on Thursday, 10th of October. That's at 12:30 p.m. GMT. Over here on this slide, I have the charts for monthly inflation for headline CPI, that's on the left, and core CPI on the right. So for September, core CPI is expected to rise 0.2%, right, slightly lower than the 0.3% that we saw in August, while headline CPI is expected to grow 0.1%, also lower than the growth that we saw in August. So if inflation, right, if the monthly growth for headline CPI and core CPI comes in line with the forecast, right, we can definitely then expect the annualized readings to continue to dissipate, to moderate even lower, right? So we can see here on this slide, the next slide here, I have the annualized readings for CPI. On the left, I have the annualized reading for headline CPI, and on the right, I have the annualized reading for core CPI, both of which you can see have moderated significantly lower, with headline CPI dropping down to 2.5% in August, while the core dropped down to 3.2%. Now, looking at the forecast for headline CPI, it is expected now to moderate even lower, right? We are expecting further easing on an annualized basis, dropping from 2.5% down to 2.3%. So if we do see inflation continue to cool in the US, right, this is very likely going to function as a strong bearish catalyst for the dollar. So take note, the dollar could come under significant selling pressures on Thursday, 12:30 p.m. GMT, right? Okay, now with that, now let's move on over to the charts and trading view and start the analysis on the dollar index. Then, of course, we'll work our way down through some of the majors, right? And also we'll take a look at the requests on the dollar yen and of course the euro pound as well. Right. So first of all, looking at the dollar index here, right, we can see, right, just maybe let's go on to the 30-minute time frame, and we can see that when I put the marker on at 12:30 p.m. GMT, 4th of October, right, we can see this very strong candle here, this very strong rally in the dollar index, right? The dollar index went from as low as 101.86 to as high as 102.63 in a matter of 30 minutes, right? This was when non-farm payrolls was released, right? Remember, non-farm payrolls increased much higher than the forecast, and it was also the highest gains in 6 months, while the unemployment rate edged lower, both of which functioning as a very strong bullish catalyst for the dollar, and hence we see the dollar index surging from 101.85 to as high as 102.68 during the US session last Friday, right? So you can see very strong rally or very strong surge in the dollar index. So with that, it looks like the momentum is going to be in place today as well, right? You can see here on the daily time frame, you can see the dollar index opened up at around 102.48, then dropped to as low as 102.42, and it has hit as high as 102.61. So it is definitely being supported, right? It's definitely being supported. We are seeing demand for the dollar pick up very significantly, right? Since last week, right? Since last Monday, we've seen demand for the dollar pick up very significantly, right? If you look at it, it has actually broken out of several key resistance areas, right? It has broken out of a descending trend line. This took place on Wednesday, 2nd of October, right? The first breakout took place through the descending trend line on Wednesday, 2nd of October. And then the second breakout took place on Thursday, 3rd of October, where it broke above this previous resistance barrier, this level at 101.77. Previously was a strong resistance barrier, which got taken out as well. Right, so what was previously a resistance area can now function as support. That's how the first support has been identified, and that's at 101.77. It's a nice pullback support level here. Right, and then looking a little bit higher, right, we can see at 103.24, I see a pretty decent resistance level, right? That's accompanied by the 50% Fibonacci retracement. We can see a little pullback here, right? Although there's a small pullback, but we can see on Thursday, 21st of March, the dollar index actually gapped lower, stabilized before staging a very strong rebound here. And then come August, in the second week of August, as the dollar index was in a strong downtrend, this retracement to the upside or this counter rally to the upside, right, stalled around 103.24 before reversing to drop lower, right? So you can see here, this is a pretty decent resistance level that's accompanied by the 50% Fibonacci retracement. So with demand for the dollar looking strong, right, I think we can expect dollar index to push higher towards this pivot level here for the first couple of days. Remember, on Wednesday, we have the FOMC meeting minutes that will be released, and we have US CPI data out on Thursday as well, both of which could function as a very strong bearish catalyst for the dollar. So for the first couple of days, so that's maybe Monday and Tuesday, we can perhaps expect demand for the dollar to remain strong, thus pushing the dollar index higher towards the pivot at 103.24. However, in the second half of the week, when we have the release of the minutes as well as release of the latest CPI data, both of which could function as a strong bearish catalyst for the dollar index. So we could see a potential reversal close to this pivot, and we may see the dollar index pull back quite sharply as we wrap up the week. So take note of the key support and pivot levels as well as the resistance as well. There's a pretty decent overlap resistance here at 104.68, right? This resistance level also has the presence of a 78.6% Fibonacci retracement. Right, so these are the key levels for the dollar index on a daily time frame. Let's take a look at it on a 4-hour time frame. I think this is pretty much fine. What I would add is maybe a Fibonacci retracement from this swing low on the 30th of September going up to this swing high here on the 4th of October. I believe we may have the 38.2% retracement that aligns pretty well with the first support. That's great. So let's keep that on, right? This is a nice pullback support level that also has the presence of a 38% Fibonacci retracement, right? So remember, once again, maybe for the first couple of days, demand for the dollar is going to remain strong. So that is quite likely going to push dollar index up towards the pivot level at 103.24. However, when we see the FOMC meeting minutes being released on Wednesday, and after that on Thursday, we have the CPI data, right? We could potentially see the dollar index stall and reverse to drop lower, because both of those data points or news releases are quite likely going to function as a bearish catalyst for the dollar. So we may see this recent strong bullish uptrend for the dollar index stall in the second half of the week and potentially reverse to drop lower. Right, so these are the key levels for the dollar index on a daily and 4-hour time frame. And of course, if dollar is going to rise higher, we can also expect dollar yen to push on a little bit higher as well. However, for today, we can see it's actually pulling back towards the pivot. Right, the pivot is at 146.90. Right, you can see at this level previously functioned as resistance, and then after breaking out of this level very cleanly last Friday, this swing high resistance at 146.90 can now potentially function as a pullback support. So the pivot is actually in fact a pullback support level for the dollar yen. Oops. right? And looking a little bit further below, right, there's a pretty decent support level here at 141.9069, right? We see the dollar yen bouncing off this level several times since 5th of August, right? So that's how the first support has been identified, and the first resistance, right, can also be, there's also an intermediate resistance I would like to point out, right? There's an intermediate resistance that I would like to point out as well, right? Intermediate resistance at around 149.39, and at the same time you can see that higher up there's a nice pullback resistance at 152.71 that is accompanied by a Fibonacci retracement at 61.8% and a Fibonacci extension at 161%, highlighting a very strong resistance barrier here. Right, and with this retracement, probably, let's see, let's pull up everything, right? 50, 61, right? Okay, I think that's fine. Let's keep 61. So you can see here, dollar yen seems to be pulling back today, but remember, it's also made a nice bullish breakout through the descending trend line and through a swing high resistance as well, right? You can see here there was a pretty decent descending trend line for the dollar yen that was where that was taken out on Friday, 20th of September. So there was a bullish break above the descending trend line on 20th of September. And then last Friday, we saw another bullish break above the swing high resistance that took place on 2nd of September. So we've seen strong bullish reversal for this currency pair and breaking above a prior high as well. Right, so now, but for today, dollar yen looks to be pulling back. So if it can manage to stay above the pivot level here, then of course I think it's going to there's more likelihood that it's going to be supported and climb higher, and especially if it can break above this intermediate resistance at 149.39, we could really see dollar yen make a strong push towards the first resistance at 152.71. Right, so these are the key levels for the dollar yen on the daily time frame. Now let's zoom on down to the 4-hour time frame and take a look. I believe on this uptrend here, right, there's a nice uptrend here that begins on this swing low on 30th of September, ending with the high of earlier this morning, right? I believe there's a, all right, no, sort of in no man's land, right? 23% here, 38% here, right? Okay, that's fine. If you don't see a Fibonacci retracement level or an extension level or projection level aligned well with a predefined support or resistance, that's fine. Don't force the Fibonacci level onto the analysis, right? It should be complementing the analysis rather than trying to force level Fibonacci level into the analysis. All right, looking at it on a 4-hour time frame, we can see here pivot at 146.90 is a nice pullback support, right? It functioned as a good swing high resistance on 2nd of September, also functioning as a pretty decent swing high resistance last Thursday, 3rd of October, and of course strong robust non-farm payrolls caused the dollar yen to surge past this level, right, breaking above a multi-swing high resistance. So this pivot is now a nice pullback support level where I think the dollar yen could potentially stabilize and reverse to climb higher. Right, and also there's probably, yep, I think we can also draw a nice ascending trend line. In fact, I think this could even be a nice bullish channel for the dollar yen on the 4-hour time frame, right? Actually, I reckon this is actually a very nice bullish channel here, right? There we go. We also see the dollar yen trading in a very nice bullish channel in the 4-hour time frame. So take note, the lower trend line of the bullish channel can also help us identify a potential support area. So this area that's going to be bounded by the bullish channel and the pivot, right? Take note, these are key support areas, and if both of them give way, right, if the dollar yen breaks out of this bullish channel on a 4-hour time frame and also breaks underneath the pivot, right, that means demand for the Japanese yen has picked up significantly, and we can then expect dollar yen to perhaps drop even lower, right? Because even previously here, you can see dollar yen trading in a pretty decent bullish channel as well. This was from 16th of September till the 27th of September. So a period of nearly 2 weeks, dollar yen was trading in a nice bullish channel, after which it gave way and it dropped as low as 141.61. Right, for now, it's trading in another brand new bullish channel. Right, so take note of that. Take note of any break out of the bullish channel as well as below the pivot is likely to see dollar yen drop even lower. Right, the bears could we could expect demand for the Japanese yen to pick up very strongly, causing dollar yen to drop even lower. But for now, it's quite clearly trading in a very strong uptrend. So if it can stabilize at around the pivot, which is at around 146.90 or perhaps even around 147, right, then we are likely to see this uptrend resume And especially if you can see a nice clean break above this swing high resistance here. This is a nice intermediate resistance at 149.39. Then definitely we can expect dollar yen to make a good run towards the first resistance at 152.71. All right, okay. We've also had a request by Shal for euro pound, right? So let's take a look at euro pound. Right, we'll start on the daily time frame first. And we can see here euro pound has dropped significantly since the second week of August, right? It was trading around 86.20 and has dropped as low as 83.16. So this shows the significant demand for the British pound versus the euro. So you can see the pound is definitely a much more stronger currency relative to the euro over the last 8 weeks or so, right? So last week we saw the euro pound bounce strongly on Thursday, and then Friday was a sharp pullback. And today as well, although this currency pair gapped lower, it gapped lower at about 83.50, but it has actually started to rise quite strongly. But once again, right, it's in a strong bearish downtrend. We see a series of lower highs, lower lows. It's also trading within a bearish channel. And this intersection here that we have, right, there's a nice intersection between the upper trend line of the bearish channel, the pivot level, both of which are identifying a very significant resistance area here, right? So take note, although euro pound seems to be rising, right, this pivot level here is a region where it's quite likely to stall once more and potentially reverse the drop lower. Not only that, we see the bearish Ichimoku cloud in red, right? And the currency pair continues to trade underneath the bearish Ichimoku cloud, which highlights the ongoing bearish momentum. Now, perhaps there's a Fibonacci retracement that we could use around this pivot level. Let me see. Let's see if there's a Fibonacci retracement that we can use. Okay, no, that's fine. There's no retracement around the pivot, but there is a retracement at 61.8%, which is being used to help us identify a pretty decent resistance here. Actually, probably I would maybe bring it down a little bit closer. Right, there's actually a pretty decent overlap level here. Right, there's a pretty decent overlap level here. Right, and then on this downtrend, we can also run one more Fibonacci retracement from this swing high on the 11th of September, going down to the swing low on the 1st of October. Right, we can see the 61.8% retracement on this downtrend aligned very well with the pivot. So take note, this pivot is actually an overlap resistance. Previously, the pivot at 84.07 functioned as support at the end of August, and then last Thursday and Friday, it functioned as strong resistance, thus creating an overlap resistance. So the pivot is actually an overlap resistance, which is accompanied by a Fibonacci retracement at 61.8%. So we have several elements that highlight a very strong resistance barrier, right? We have the 61.8% Fibonacci retracement, we have the overlap resistance at 84.07, which is the pivot, and we also have the upper trend line of the bearish channel all functioning together to help us identify a strong resistance zone. And at the same time, of course, the bearish Ichimoku cloud itself highlights the ongoing bearish momentum, or the red Ichimoku cloud highlights the bearish momentum, right? So these are the key levels for euro pound on the 4-hour time frame. So should this currency pair reach the pivot level once more, it is quite likely to stall around this area and reverse to drop lower. Now let's take a look at it on the 4-hour time frame. Right, is there anything else I would like to identify? Okay, since on the 4-hour time frame we see a nice downtrend here, right? So we can also run a Fibonacci retracement from this swing high on 3rd of October, going down to the swing low early this morning. Once again, we see the 61.8% retracement aligned pretty close to the pivot as well. So let's keep 61 once more. So you can see here, this is indeed a pretty strong resistance barrier. We have two Fibonacci retracements at 61.8%. We have the overlap resistance, which is the pivot, and we have the upper trend line of the bearish channel itself, right? So 4 elements highlighting a very strong highlighting a potentially strong resistance barrier. All right, so these are the key levels for the euro pound on the 4-hour time frame. And one last retracement I reckon we can do is from here, 1st of October, this low on the 1st of October, going up to this high on Thursday, 3rd of October. There might be a 78.6% that we could use. Nope, 78.6 is simply too far. And 61.8% is well above it. So it's already broken. Actually, 61.8% can no longer be used because we can see euro pound is already broken under this level here. So that's fine. Let's not, once again, right, let's not force a Fibonacci level onto the analysis if it's not necessary. Right, so these are the key levels for euro pound. Okay, then let's take a look at the Kiwi, of course, right, with RBNZ coming up on Wednesday. Let's take a look at the key levels for Kiwi as well. right? After making a high at around 63.78 on at the beginning of October, right? This currency pair has reversed very sharply as demand for the US dollar picked up very strongly, right? And also, of course, last Friday's non-farm payrolls accelerated the downtrend as well, right? The downward momentum has accelerated. And of course, we also have on Wednesday the RBNZ looking to cut its official cash rate by 50 basis points. So if that were to happen, all right, we can expect this currency pair to come under further selling pressures. So perhaps we could even see it break below uh, the pivot here, right? The pivot is a strong support level, so we may even see a potential bearish breakout through the pivot here. So take note, because of the RBNZ meeting coming up on Wednesday, we could see the Kiwi break through this pivot level at 61.27 and make and drop further lower, right? So this pivot level is actually a nice pullback support and swing low, right? First made a nice pullback level here, a nice pullback here on 23rd of August, after which it made a nice swing low here on mid-September. And on the same time, we can also see that this level here is accompanied by 50% Fibonacci retracement. So we found this retracement level by starting from this swing low on 5th of August, going up to the swing high on the 30th of September. We can see that the 50% retracement level aligns pretty well with the pivot, and at the same time we can also see the 61.8% retracement level align pretty well with the first support and the Fibonacci extension at 127%. Right, so take note if you do see the RBNZ cut rates on Wednesday, and also we see a statement that conveys very dovish that conveys a very dovish outlook, right? We can expect this currency pair to very likely break through the pivot at 61.27 and drop lower down towards the first support at 60.36. The first support is a level that has been identified by a Fibonacci extension at 127% and the Fibonacci retracement at 61.8%. So this is a strong Fibonacci confluence area, and we can see a little pullback here taking place on Monday, 19th of August as well. Right, so these are the key levels for the Kiwi on the daily time frame. Okay, resistance is an overlap level, right? Previously, we can see the Kiwi making a swing high resistance here on 2nd of September, running the resistance once more on 18th of September, after which it proceeded to function as strong support on Wednesday and Thursday, 25th and 26th of September. So this creates a nice overlap resistance level here now. So this level at 62.60 has been used in the identification of the first resistance, and it also has a 50% Fibonacci retracement assigned close to it. So look at it here. We started this retracement from this swing high on the 30th of September, going down to the low of today, and we can see the 50% retracement aligned pretty well with the first resistance. Right, hi Shal. All right, most welcome. No worries, most welcome. Right, so take note, these are the key levels for the Kiwi on the daily time frame. Let's take a look at it on a 4-hour time frame. Right, I think pretty much this is good. I don't think there's a need to really fine-tune the analysis, right? Probably not. Maybe I just want to see where the 161% extension sits. Maybe that's a good idea to see where it sits. Okay, it's somewhere around here. However, right, the next support level beyond this Fibonacci confluence, which is the 61.8% retracement and the extension at 127%, the next major support looks to be at this overlap level here at 59.81. This is where I think would be another major support level for the Kiwi. Right, so you can see here at 59.81, this currency pair reacting up this level several times, be it as resistance or support, thus creating a very nice overlap level. Right. Okay, so these are the key levels for the Kiwi on the daily time, on the 4-hour time frame, as well as on the daily time frame. Right now, let's take a look at the commodities. Let's take a look at gold and crude oil, and of course, should you have any other requests for any other instruments, please do drop them in the chat box early, so we have time to go through the analysis together. All right, looking at XAU USD. So this is the instrument that tracks spot gold futures. As you can see here, this currency, this precious metal has been trading sideways since 20th of September. So for a couple of weeks, right, it's just been trading within this range here, within this box. You can see here right? It has found nice support at around $2,625 per ounce and run into resistance at around $2,673 per ounce, right? You can see here very strong resistance and support areas, right? So it's experiencing sideways trading since, I would say, Monday 23rd of September. So that's almost 2 weeks now, a period of 2 weeks where it's been just consolidating within this range, right? So of course the first support is going to be here 2,621. This first resistance can also be identified as a potential pivot as well, of course, right? And also, if we do see the US dollar sell off sharply in the second half of the week, remember, once again, we have two sets of, or we have two or three fundamental news releases that could cause the dollar to come under significant selling pressures, right? On Wednesday, we have the FOMC meeting minutes. Thursday, we have US CPI. And finally, on Friday, we have US PPI, all of which could contribute, or all of which could function as strong bearish catalysts for the dollar, and that in turn is potentially going to function as a strong tailwind for gold prices. We could potentially see gold make a break above this pivot in the second half of the week, right? So take note, there's a potential scenario where we could see a strong bullish breakout through this pivot for spot gold prices in the second half of the week, right? Especially the data uh, continues to show inflation cooling in the US, right? And we could really see the dollar come under significant selling pressures, which would then help gold potentially climb even higher. So we may have a potential bullish breakout through the pivot later on in the second half of the week. And if that bullish breakout takes place, how could we possibly identify the next resistance area? So right, so for that, first of all, we're going to run a Fibonacci retracement here, right? We're going to run a Fibonacci retracement from this swing low here on 5th of August to this intraday all-time high, right? This high on 26th of September is the intraday all-time high for spot gold prices. That's at $2,685.57. Now let's take a look at all the fibs, and we can see that 23.6% sits pretty close here, and 38.2% sits pretty close to this little pullback. So we can also identify another support level around here, right? This, and we can use 23 and 38% to highlight these support zones. Now, as I mentioned, right, gold prices are rising towards the pivot, and the pivot is close to the intraday all-time high. How can we possibly identify the next resistance area or the next potential resistance area? We can rely on a Fibonacci extension. To find that extension, we're going to run a retracement from the intraday all-time high on 26th of September going down to this low on Monday, 30th of September. Remember, key extension levels sit at 127 and 161%. So there we go. So that means the first resistance for spot gold prices can be identified at around $2,702 as first potential resistance, and beyond that, the next resistance barrier can be identified by the Fibonacci extension at 161%, and that's at $2,700, $2,723 here. Right, so take note, right? We may have a scenario where softer inflation drives gold prices higher in the second half of the week. So we may have a potential bullish breakout through the pivot. And if that were to happen, we can then use the first resistance and the second resistance as potential price targets, right? So we can use the extension levels at 127% as the first potential price target for long gold positions. And of course, if gold does continue to climb even higher, then of course we would then be using the extension at 161% to identify the next potential take profit target. All right, okay, so these are the key levels for spot gold prices on a daily time frame. Let's take a look at it now on the 4-hour time frame. Right, you can see here on the 4-hour time frame very clearly, this precious metal has just been trading sideways, right, since 23rd of September. Right? You can see very clearly it's just been trading within this channel, sideways channel here. Now, of course, it's just consolidating now and it's waiting for the next major catalyst to drive it higher, and that could potentially be the FOMC meeting minutes on Wednesday and US CPI data on Thursday, and also US PPI data on Friday. So take note, second half of the week is where we may have a strong potential bullish breakout opportunity for this precious metal here. Right, okay, looking at it on a 4-hour time frame, I can probably run one more Fibonacci retracement starting from this swing low on this uptrend here, 18th of September to the intraday all-time high. Let's pull up all the fibs. We can see, all right, it's a 38.2% retracement that sits quite close to the first support. You can see, right, on 30th of September. Gold prices bouncing off the 38.2%. So let's just keep that level on. Right. Okay. So these are the key levels for spot gold prices on the 4-hour time frame as well. Right, these are the key levels on the 4-hour time frame, and very clearly we can sideways channel on the 4-hour time frame much more. We can appreciate the sideways channel much more easily on the 4-hour time frame. Right. So this is what we've got for XAU USD. Let's take a look at crude oil. Right. So XTI USD is the instrument that tracks crude oil futures, and we can see since last Monday, right, last week, 30th of September, crude prices have staged a very strong rally, right? WTI oil, I believe, has climbed more than 9% last week alone, right? This was the highest weekly gain since I would say March of 2023, so nearly a year and a half ago, right? This was the biggest weekly gain since then. All right, hi Shal. Okay, with regards to the dollar, right? Okay, the ongoing geopolitical tensions in the Middle East, right, is definitely going to inject a lot of volatility for crude oil prices, and that means we're likely to see crude prices remain elevated or perhaps even climb higher, right? But in with regards to the dollar, right, I think that's a slightly different ball game as well, right? The dollar is now being more affected by uh, the Federal Reserve's monetary policy actions, softer inflation as well, right? So although sometimes the US dollar can also function as a demand for safe haven, right? Right. Sometimes gold, the Japanese yen, Swiss franc, and the US dollar itself are all safe haven assets, and sometimes they can see strong demand through periods of high geopolitical tensions. But for now, right, the dollar seems to be riding higher, right, riding higher on the stronger non-farm payrolls that were released last Friday, right. Dollar seems to be rising higher on the non-farm payrolls last Friday, and if we do see inflation continue to cool in the second half of this week, I think we can expect the dollar to probably pull back a little bit. And then if of course the geopolitical tensions in the Middle East remain elevated, that's going to keep oil prices driving higher as well, right? So take note, right now this I don't think the ongoing conflicts is going to have uh, that much of an impact on the direction of the dollar. I think the dollar is going to be more driven by monetary policy actions by the Fed, inflation data, and labor market data out of the US. Right. That then in turn, of course, demand for the dollar uh, through those elements, right, will then of course have the necessary impact on the other major currency pairs. Right. Okay. I hope I've answered your question, Shal. All right. Okay. Now looking at crude oil once again. Of course, I see it right as well on the daily time frame breaking out of this descending trend line here, right? There's a pretty decent descending trend line that got taken out last Thursday, right? We can see previously XTI USD, right, trading in a very strong downtrend, a series of lower highs, lower lows, and finally it broke out of two major resistance levels, right? So this was a major overlap resistance. The current first support at $72.73 was a major resistance. It was an overlap resistance because previously it functioned as a swing low support on 4th of June, second swing low support on 6th of August, and third swing low support on 21st of August. So before that, so initially this level functioned as a very significant multi swing low support, after which it functioned as a strong swing high resistance at the end of September. So when that happened, it created a nice overlap resistance level, which got taken out on Thursday, 3rd of October, and then that bullish momentum continued and caused XTI USD to break out of this descending trend line as well. So very strong bullish reversal for this commodity, right? As I mentioned, it has gained well over 9% last week. It was the largest weekly gain in almost 18 months, I would say. Right? And it's making a strong run towards this pivot level here. So you can see the pivot level at $78.08. It's another swing high resistance, right? It's another swing high resistance that occurred on 27th of August. That's accompanied by a Fibonacci retracement at 61.8%. So we found this retracement level, right, by starting from here, this swing high on the 5th of July, Going down to this swing low here on the 10th of September, we can see the 61.8% retracement level aligned pretty well with the swing high resistance, which is the pivot. So that means this is a pretty strong resistance area. So if you have been long on XTI USD, identifying a potential take profit target around the pivot is a suitable area to do so. So perhaps this could be your first potential take profit target here, right? And we may see crude prices stall around the pivot level at $78.10 and maybe consolidate around this level. But however, I take note, if there is any further escalation in the Middle East, right, then this pivot level is definitely going to get taken out, and we can then expect XTI USD to make a run towards this first resistance at $80.03, which is another swing high resistance that has taken place on 13th of August, and that's accompanied by the 78.6% Fibonacci retracement, right? Although these are pretty strong resistance levels, right? Remember the pivot is a swing high resistance that's accompanied by a 61.8% Fibonacci retracement, right? This would be a good area to identify a potential price target for any long positions for XTI USD. But given the current situation in the Middle East, any further escalation is of course going to drive crude prices higher. And I won't be surprised if we do see crude prices hit the first resistance at $80 as well, maybe by the end of this week or early next week, right? So take note, strong bullish momentum for crude oil prices, and these are the potential resistance areas. The pivot is a swing high resistance at 61.8%, and the first resistance is another swing high resistance at the 78.6% retracement. All right, now let's look at it on the 4-hour time frame and see if there's any need to fine tune the analysis. I think this is pretty much fine. Yep. Yeah, I don't think there's anything else to include for now, right? Of course, as we progress throughout the week, right? Any further changes to the price levels, right? Then we'll definitely be adjusting the support and resistances and the pivots as well. But for now, these levels are looking pretty good to me so far, right? So these are the key levels for XTI USD, support and resistance levels, and we are seeing very strong bullish momentum for this commodity. All right, before we continue, I'm just going to launch a poll as well. I'd truly appreciate it if you guys can give your feedback with regards to today's webinar, and also if you could smash the like button as well on the YouTube page, right? Kindly smash the like button as well. Truly appreciate if you could do that as well. Is the instrument that tracks the DAX futures, right? And today it looks to be pulling back as well. It's pulling back quite strongly. Right, so as of today, right, is pulling back, right? So initially, and then as markets reopen, right, DAX was climbing a little bit higher, so I was expecting it to reach this pivot level here, but instead it's actually pulling back. So it's pulling back towards the first support here. So the first support is a pretty decent little pullback here, right? It's we can see a nice swing low taking place here on 4th of October and a little pullback here on 25th of September. So with DAX pulling back towards this level and also testing the lower bound of the bullish channel, right? I think this first support I'm just going to identify now as a potential pivot level where we could see DAX stabilize and stage a rebound, right? So let's just identify this as the pivot, and then of course this pivot here is going to be the first resistance, and we're going to find a new first support slightly below. Right, so let's pull up all the Fibonacci retracements here. Let's take a look, and we can see there's a pretty decent level here as well, which is at around 18,690, and we can also see that this level is accompanied by the 61.8% retracement. So let's just keep 38 and 61%. Right, so we can see the DAX is falling towards the intersection of the pivot, the 38.2% Fibonacci retracement, and the lower trend line of the bullish channel as well. All three of these are highlighting a potential support area. And if we do see the DAX stabilize around this level, it's quite likely it's going to reverse to resume the uptrend. So we may see a potential bullish bounce of this level here, and then see the DAX make another run, or at least attempt to make another run towards the intraday all-time high. Remember, the intraday all-time high for the DAX was formed on Friday, 27th of September, and that's at 19,491. A little bit below. First support is at 18,691, which is accompanied by the 61.8% Fibonacci retracement. Right, so these are the key levels for the DAX on the daily time frame. It's pulling back today, but it's approaching a strong support level as identified by the lower trend line of the bullish channel, the pivot level at 18,937, and of course the 38.2% Fibonacci retracement. Now let's look at it on the 4-hour time frame. Right, I think I can draw a nice Fibonacci retracement on this downtrend as well, from the intraday all-time high on 27th of September going down to the low of last Friday. And I believe there's a 50% retracement that we could use, and we can see that this 50% retracement aligns very well with this little swing high that took place earlier this morning. Right, so we've also identified a nice little intermediate resistance level at 19,224, which is a swing high resistance that occurred earlier this morning, and is also accompanied by the Fibonacci retracement at 50%. Right, so like I said, this level here, this intersection between the lower trend line of the bullish channel, the pivot, and the 38.2% Fibonacci retracement highlights a strong support zone. And we could see DAX resume the uptrend, and especially if we can break this intermediate resistance at 19,224, which has the 50% Fibonacci retracement, we're quite likely to see this currency pair, this instrument or this index drive even higher, right? Okay, so these are the key levels for the DAX. Let's take a look at US 500, starting on the daily time frame. Right, so similarly, with markets opening earlier this morning, right, equity markets were pushing a little bit higher, they're edging a little bit higher, so I was expecting the US 500 along with DAX to make a slow grind up towards the pivot, but it's actually pulling back now. So that means this first support now is going to be identified as the pivot, and the pivot is going to be the first resistance, like similar to what we did for the DAX. Right, so once again, we have a pullback support level, which is the pivot at 5,669. We have the Fibonacci retracement at 23.6%, and we have the lower bound of the bullish channel, all highlighting a significant support area. Right, so we could see US 500 stabilize around this level or around this zone once more before staging a nice rebound. Right, and the second support, if I'm going to identify the next support level beyond the pivot, I probably see this level here maybe as a nice overlap here. Yep, this is at 5,553. We can see a nice swing high resistance taking place here on 1st of August, after which this level functioned as support on 22nd of August, and then again on 29th of August as well. So this creates a nice overlap support at 5,553. Now let's see, there any other Fibonacci retracements that we could potentially use. Right, we can use 23 and 61.8%. Right, so take note, these are the key levels here, and this resistance was found via a Fibonacci projection and a Fibonacci extension. Remember, this is the intraday high that was formed for US 500 on Thursday, 26th of September, and that's at 5,773. So in such a scenario, we have to rely on Fibonacci tools such as extensions and projections to help us identify the next potential resistance barrier. So we ran a Fibonacci projection first from point number 1, 5th of August, going up to point number 2, 3rd of September, and ending at point number 3, and that's on 6th of September. We can see the 78.6% projection sitting around 5,830. Then we also ran a retracement from this swing high here, 3rd of September, going down to the swing low on the 6th of September. We can see the extension at 161% also sits very close to the 78.6% projection, so this creates a nice Fibonacci confluence. Right, so we have a strong resistance area identified by two various Fibonacci levels. right? So that's how we've identified the resistance, right? We use a combination of Fibonacci projection and Fibonacci extension to identify a potential confluence area here. Right, now let's look at it on the 4-hour time frame. Right, if you look at it on the 4-hour time frame, actually, right, you can see US 500 has just traded sideways as well, right? It's been you don't really see any or major bullish uptrend or downtrend, right? You can see it's actually consolidating between 5,675 on the lower bound and about 5,772 on the upper bound. This has taken place, right, since 19th of September. So for over the past 3 weeks, right, the US 500 has just traded sideways, right, within this within this channel here, sideways trading channel, and right, it's just waiting for the next major catalyst to drive it higher, right? We can probably expect equity markets to perhaps just continuing to trade around this within this channel for at least for the next couple of days. However, if it does break out of this bullish channel and break below the pivot, right, then we can definitely expect further downside action, right? Remember, like what we saw here at the beginning of September, a pretty strong reversal, right, taking place in the first week of September, right? So if we do see US 500 break out of the bullish channel and also breaking below the pivot, right, then we may see further downside action. But for now, if it continues to range within these two levels here, right, I think we can expect just further sideways consolidation for the US 500, at least for the next couple of days. Right, so these are the key levels for US 500 on the daily time frame, as well as on the 4-hour time frame, right? Whatever we've identified on the daily time frame is more than applicable on the 4-hour time frame as well here. All right, okay. As we approach towards the end of today's webinar, right, are there any other requests for any other currency pairs, commodities or indices, right? If there's nothing else, then I'll just cover the euro, right? Let's just cover the euro and then we can wrap things up. Right, so once again, we'll start the analysis on the daily time frame here. So you can see the euro has fallen quite sharply since last Monday, right? After hitting a high of 1.1212, it has reversed sharply to drop under 1.10 as well, right? We can see stronger demand for the dollar, and of course, robust non-farm payrolls last Friday has really accelerated this downtrend here. So it's made a break below the pivot, right? This pivot level at 1.1005 was previously a very nice swing low support, right? This was a very nice swing low support that took place on mid-September, right? Very nice swing low bounce here. It was tested on Thursday, 3rd of October. It held up on that day. However, come Friday, the robust NFP data caused a bearish breakout, and we are quite likely to see this currency pair drop lower, right? So we see a nice support level here identified at 1.0869, and it's a little pullback resistance here, little support here. We have a pretty decent overlap support level at around 1.0869, which is also accompanied by the Fibonacci extension at 161%. Right, so how do we find this extension level? Right, this extension level was found by running a retracement from here, this swing low on the 11th of September, going up to this swing high on the 25th of September, and we can see that the Fibonacci extension at 161% sits pretty close to this overlap level here. Right, and also we have also run a Fibonacci retracement from this swing, which is the lowest point here. Yep, this is the lowest point. This swing low on 26th of June, going up to this high on 25th of September. We can also see the 61.8% retracement aligning well with this 161.8% Fibonacci extension. So we have a nice Fibonacci confluence here as well that has helped us identify a pretty strong support zone. Right, so these are the key levels for the euro. Right, okay, for our time frame, let me see. Oh, and also this currency pair was previously trading in a pretty good bullish channel as well, right? We have a nice bullish channel here, right, which got taken out last Tuesday, 1st of October, right? When price breaking out of this bullish channel, it really triggered further downside action, right? And it's dropped very sharply since then. All right, okay, let me see on the 4-hour time frame. Uh is there anything to fine tune? Maybe I'll just take a look at where the 127% sits. Might be a good idea, right? Okay, actually we can see, right, there's a pretty decent swing low support that took place here on 15th of August, and that's at 1.0951. And we can also see that it is where the euro has found support last Friday and this morning as well, right? So this looks like to be a pretty decent support area as well. Intermediate support area that's identified by the Fibonacci extension at 127%, and by this little swing low that took place here on 15th of August, right? So if the euro uh, gives way below this 127% extension level, then definitely we can expect it to see it, or not definitely, but we can then expect further downside action, and it can potentially reach the first support at 1.0870. All right, okay, so these are the key levels for the euro on the daily time frame and the 4-hour time frame as well. And the only thing we added on the 4-hour time frame was the 127% extension and this little swing low that took place on 15th of August to highlight a pretty decent support area as well. And this is where we do see the euro stabilize today as well. All right, so this is what I've got for you guys for today. All right, thanks everyone for tuning in. And before we wrap up today's session, take note, right, there's quite a few things going on the calendar for this week. Right, we have the monetary policy meeting minutes from the RBA tomorrow. That's a Tuesday, 12:30 a.m. GMT. We also have the RBNZ expected to cut its official cash rate by 50 basis points. We can expect the Kiwi to come under significant selling pressures on Wednesday, 9th of October. That's at 1 a.m. GMT. We also have the Fed releasing its minutes on Wednesday, 6 p.m. GMT. And of course, we have US CPI data and PPI data on Thursday and Friday, right? So we do see inflation continuing to cool in the US, both from the consumer and producer sectors, right? Of course, then that's definitely going to cause the dollar to come under significant selling pressures. And we could see softer CPI and softer PPI functioning as pretty strong bearish catalysts for the US dollar. So that in turn, of course, could mean gold prices moving higher. And we could also see currency pairs like the euro, the pound, Aussie, and Aussie, sorry, to climb higher as well. Right. This is more towards the second half of the week. So the first half of the week we could see demand for the dollar remain strong. However, in the second half of the week, especially with CPI and PPI data, we could see the dollar face significant headwinds. All right, that's all I've got for today. Thanks everyone for tuning in to today's session brought to you by IC Markets. Do look out for all upcoming webinars for the rest of this week. Right, we've got a combination of live analysis and educational topics for both in English, Thai, and Bahasa. All right, thanks everyone. Take care and have a great trading week.